Let's continue here tonight. Struggling consumers are in for more pain after the South African Reserve Bank today hiked interest rates points by 75 basis points. This means the prime lending rate, which is what banks charge consumers to borrow money, will rise from 9.75 to 10.5%. Governor Lesetja Kganyago says the move is necessary to tame what he's described as the monster of inflation.
Against this backdrop, the MPC decided to increase the repurchase rate by 75 basis points to 7% per year with effect from the 25th of November 2022. 3 members of the committee preferred the announced increase. 2 members preferred a 50 basis points increase. The level of the repurchase rate is now above the level prevailing before the start of the pandemic. The revised repurchase rate remains supportive of credit demand in the near term, while raising rates to levels more consistent with the current view of inflation and risks to it.
We're now joined by the Alternative Information and Development Center Senior Economist, Dr. Dick Forslund. Dr. Forslund, good evening to you. Thanks for your time. Let me begin firstly with just getting your reaction to the 75 basis point increase. What do you make of it?
No, yeah, good evening to you, Kathy. No, of course, it's terrible. We had a growth in the economy of 0.7% second quarter, and I doubt now that the projection in the midterm budget, I think it was a projection of 1.6% growth in the economy this year. I doubt that this will happen. I mean, the Reserve Bank is basically compressing the domestic demand. Someone who has a loan of 300,000 Rand will pay some 190 Rand more per month. And yeah, so that is what's happening. But I mean, what do you expect from Governor Kganyago who is all in for free market capitalism and financial markets? So when other central banks are increasing their repo rate, then the South African banks, Reserve Bank, simply follow suit.
There's been a big debate that has been taking place among academics and some policymakers, and the HSRC has been doing significant research on this, and it really looks at what it describes as the crossroads that the macroeconomic policy framework in this country finds itself in, and the important decisions that need to be made now to ensure a different trajectory from the status quo that we are in, because it warns if we continue along this line, unfortunately, when we get to 2030, the situation will be worse than it is right now, as far as unemployment and as far as inequality. And the Reserve Bank, of course, is seen as really a key player there.
Yeah, and I would agree with that. I mean, what you find in the business press when you read the articles about recent hike now, it's resignation. But this is... it is kind of free market capitalism under the macroeconomic framework we have now. And I mean, viewers should know also that this has been signed with the World Bank in the so-called country partnership framework. So it is the political trajectory of the government also. It has been signed by the finance minister. And I think it's true. This will not, of course, cut unemployment, and it will also, I mean, even to a small firm or to a shop owner in the country, a cost is a cost, and if the loans that such an owner is having, if they are increasing if he or she has to increase the payments, it might happen that such an owner is also increasing the prices of its goods and services. But I mean, the governor is targeting the Rand and the value of the Rand, and I mean, there's no consumer demand hike or anything like that. I think those who sort of hope to sell a lot of merchandise and goods during Christmas, I think they will be disappointed. I mean, but instead of complaining, what should the Reserve Bank do? So the finance minister of Bangladesh, ever since the financial crisis in 2007, 2008, he used, or she, in fact, I don't know if it is a man or a woman, but what the Reserve Bank or the central bank in Bangladesh did was to use the balance sheet of the Reserve Bank to support small and medium firms and to lend directly at no interest rate or to very low interest rates. And that is, it is, I'm sure it will be met by complaints from the private bank that you are crowding out for profit banking, etc. But it was a successful policy, and it has been going on for many years. And I mean, it's also a discussion internationally from the ILO, the UN organization ILO, and UNCTAD, that the reserve banks and the central banks of the world, they have to abandon this strict inflation targeting because of the risk for recession. So it is indeed a big debate. But I think that until our Reserve Bank governor have a anti-capitalist revelation, then this will continue. And I don't think I don't think it's effective against inflation, because the inflation is imported. It is, as you know, for example, dependent on the war in Ukraine and other such factors. The oil price has just gone up again, etc.
Looking at, the example that you've used as perhaps a solution, the kind of innovation that the Reserve Bank can be looking at, it is an institution that is often described as quite rigid, also quite conservative, so unlikely that we'll get any radical decisions or changes in the way that it approaches the monetary policy framework of the country. What do you think needs to be happening now to at least ensure that the debate that is happening in the country is part of the conversation within the Reserve Bank? Because, of course, there are many South Africans and economists, and academics that are saying we might not be where we need to be for the kind of outcomes we're looking at.
Yeah, I think we will see what happens at the ANC conference now in December. I think there also needs to be a shift of opinions in the business press and among business journalists to sort of be more open for other solutions. I think in the immediate turn, as the Reserve Bank is targeting the value of the rand, if the government is continuing this borrowing spree when it comes to taking loans in foreign currency, mainly in dollars. I mean, Ramaphosa was in New York, was it 5-6 weeks ago, spoke about that the $8.5 billion loan for a just transition was not enough. He wanted to borrow an additional $38 billion. ESCOM's board is speaking about borrowing foreign currency. They speak about over $70 billion. And the more a country, the more South Africa has in loan in foreign dollars, in foreign currency, and if you have a free market sort of view on what the Reserve Bank can do, then the pressure of increasing interest rates to defend the value of the rand so that the loans don't get too expensive, it will increase. So that is also a policy change that has to happen. But I mean, what can you do when the neoliberal consent is so entrenched in the country, in the elite, and when you have this agreement with the World Bank of a country partnership framework, because this policy is enshrined in what the government and the finance minister and the Reserve Bank have signed in June 2021.
All right.
So you have to abandon such agreements, and you have to have your more independent economic policy. I agree with that completely.
All right, Dr. Dick Forslund is with the Alternative Information and Development Center. He is a senior economist there.